In this video, as a small business owner, I'm going to show you how to review your balance sheet. As you'll remember in a previous video, what I said was the balance sheet is where you should start your financial review. That is where the financial bodies are buried. So I'm going to go through the top 5 things that you as a small business owner should be looking at on your balance sheet. And we're going to do this in QuickBooks Online. What you're looking at on your screen right now is a demo company. It's called I Love Lamp. This is our internal demo company in my accounting firm. First and foremost, on the left-hand side in QuickBooks, you're going to go to Reports, and then select the balance sheet. What we're looking at right now is a full year, so from 1/1 of 2023 through 12/31 of 2023. And this is on an accrual basis, and we're just showing the totals. So the first thing I'm going to do is I'm going to just scroll down this page and look for anything that is obviously wrong. And what I mean by obviously wrong, we've got $6.3 million in cash. Do I really have that in my bank account? Do I feel like I've got that much cash? And sometimes with business owners, they'll say, no, I don't think I've got that much cash, or I don't have negative cash. How is that even possible? And that'll lead you to probably some sort of an accounting problem that you have, or some sort of a problem in your process. As I kind of scroll down, inventory asset, negative $40. In general, I should not have negative amounts on my balance sheet. The exceptions are going to be accumulated depreciation, which you see right here. That is going to be a naturally negative amount. It reduces your assets. You may have a reserve for a bad debt, so that's going to be a negative account receivable, essentially. But generally, those are going to be about it. You may have owner's draws on your balance sheet, or those may be combined in some other account, but you really shouldn't have negative amounts. There's a couple of exceptions, but not many. So I'm looking for negative amounts. I'm looking for things that are obviously wrong, cash balances that are too high, debt balances that are too high or too low, just anything that is obviously wrong. So that's the first thing that I'm looking at. The next thing that I want to make sure of is I want to make sure that all of my accounts are reconciled. And in particular, I definitely want to make sure that my cash accounts are reconciled, and I want to make sure that my credit card accounts are reconciled and my debt accounts are reconciled. Now, you can do that a couple of different ways. What I really like to do is drill down into the checking, the savings, the credit cards, and go in, and I'm going to go to this gear icon right up here, and I'm going to check the clear box. And then I'm going to click off, and this column over here on the far right, this is going to tell me if the transaction was cleared, if it was reconciled or not. So something like this right here. So this wasn't cleared, so it didn't come through the bank feed, and it hasn't been reconciled. This may be an extra transaction. This may be something that does not belong here. So I'm going to be looking for transactions like that. If my bookkeeper tells me, hey, everything's reconciled, and I'm seeing these, these C's over here, these C's should turn to R's once a transaction is reconciled. If I'm seeing blank over here, right where the mouse is clicking, those are transactions that maybe shouldn't be here, and I should be asking the question about whether or not those are appropriate. The next thing I'm going to look at, so number 2, is I'm going to look for trends. So up here, display columns by, I'm going to go and I'm going to click months, and I'm going to run my report, and I'm going to be looking for trends. So in particular, cash. Is this going up month over month, or is it going down? I'm going to go down here and I'm going to look at debt. So credit cards, is this going up month over month, or is it going down? So cash, we want that to be going up. Debt, we want that to be going down. Accounts receivable, depending on the business, we may want that to be staying steady. We may want that to be decreasing. Just depends. But we're looking at trends. That's number 2. Number 3, we're looking for working capital. So what working capital is, it's a measure of the liquidity that you have in your business. So I want to know exactly what my working capital is, and I want to look at this on a trended basis as well. Now, for the sake of this video, I've gone ahead and I have removed the trend on the balance sheet, but the way to calculate this is current assets. So this is going to be 7294,928.70 minus current liabilities. And then we can also look at this as a ratio. So this is going to be 2018,580.58. So I've got working capital of $5.3 million. Seems pretty good within the context of our cash balance, $6.5 million. I would say that ratio for this particular business, this is a marketing agency, pretty good. But we want to be looking at our working capital. We want to make sure that we have enough liquidity in the business in order to sustain operations. Next thing that we want to look at, I'm going to go back to my trended balance sheet, is we want to be looking at the equity in the business. Now, your equity is not the valuation. That's a common misconception with business owners. But we want to make sure that our equity, so this is what we have in the business, is growing over time. That means that we're profitable. We're probably leaving more cash and more assets in the business than what the business is making or generating. That is a good thing. That makes us sustainable over time. That means that we can reinvest back in the business. But we want to see our equity growing over time. So that's number 4. And then the 5th thing that we want to look at actually is going to be off balance sheet. So I'm going to go back to reports, and I'm going to go and I'm going to generate an accounts receivable aging summary. And I want to see what makes up my $746,000 total balance that is sitting in accounts receivable. In general, I want to see more dollars over here and less dollars over here. As those dollars start to shift to the right, meaning they've been hanging out there for longer, the odds are that those are not your dollars. So if you send an invoice to a customer, you've done the work. The faster you collect that, or the more likely that a customer is to pay, the faster you're probably going to collect it. Now, if that invoice is hanging out for a long period of time, that could be an indicator that maybe that customer isn't going to pay or is less likely to pay. That's a bad thing. You're essentially financing their purchase of your service or of your product. Not a good thing. So that's on the receivable side. That is cash that is owed to you. And if we go back and if we look at accounts payable aging summary, we just want to make sure that things are staying current. We want to make sure that we're staying on top of our bills. We want to make sure that things aren't getting super old. We could be incurring finance charges on that. Not a good thing. So we just want to make sure that we're paying our bills on time, and that nothing is slipping through the cracks. So that is the top 5 things that you should be looking at to review your balance sheet as a small business owner. I hope this helps, and I will look forward to seeing you in another video.